Hi, and welcome to the Stake Guide to all things crypto blockchain. So we're joined today by Ahmad Hammoudi, who's our COO. You may have seen him in another video that we've done, which is our guide to how we select and source properties. So if you haven't seen that on our YouTube channel, please check it out. It just so happens that our resident COO is also a crypto blockchain expert. So in your previous role, you worked in that space for a couple of years. Now, although we are in the real estate and property investment space, this is a hot topic, and we do want to give our clients and our customers investment guidance and advice and tips and guides about all kinds of asset classes. So we wanted to use this video as a guide, as if you like, an idiot's guide for Chris, me being the idiot, to talk about, what is crypto, what is blockchain, and then we'll naturally move on to, there is a connection between real estate and property when it comes to crypto. Absolutely. So tell me, talk me through, I'm completely uninitiated. I see the price of Bitcoin going up and up. What the hell is blockchain? What the hell is crypto?
Okay. I guess that's a good way to start this. There's people always conflate the terms. People always, Bitcoin, blockchain, they kind of use the terms interchangeably. It's not always like very clear what the difference is. So I'll start with crypto, and I think the easiest way to do this is to stick to the OG of cryptos, which is Bitcoin, which is essentially you can think of it as just currency, right? So the difference between a Bitcoin and a dollar bill is that a dollar bill is something that you can touch. It sits in your wallet. You can give it to me. After you've given me your dollar bill, I have it, and you don't anymore.
Right.
The blockchain as a tech that powers Bitcoin came up from the attempt of an individual or a group of individuals to solve this exact problem. So you can give me a dollar bill, and with 100% certainty, you can know that now I have it and you don't anymore. You can't do that with a digital currency. So for example, if you're emailing me a file, you know that I have the file, but you still have a copy of that file. Now, this is fine. But in the context of currency, this is insanely problematic, right? Because you can't just create copies of currency and give them to people.
It's one of the reasons the music industry have had so many problems, because you used to buy physical. Music was a physical thing, right? It was a cassette, it was 100%. A CD. It was, you love this term, fungible.
Exactly, fungible. So blockchain was the technology that was created to solve the problem of double spending, or of giving a copy.
Infinite copying.
Yes, infinite copying. So it's really just the underlying technology that makes this possible, that makes the creation of a digital currency or a non-fungible digital asset possible. Now, sidestepping all of the technical complexities of it, the invention of blockchain allowed us to have Bitcoin and a whole suite of other cryptocurrencies. Now, the currency itself started off as really a way for people in a very niche part of the web it started off actually as a project as a challenge for somebody to solve a double spend problem. And then when it was solved, it gained popularity in really, like, let's call them the hidden corners of the internet.
Right.
Cyberpunk, digital anarchists, really hardcore libertarian communities that, they were like, wow, we finally have a tool that allows us to transact outside of the traditional monetary systems. And that was Bitcoin. And for a very long time, nobody heard, outside of those circles, nobody heard of it. And you could, it was a time where it was really like the Wild West, where you could, on a very small, underpowered laptop, mine and create hundreds of Bitcoins very, very easily.
Let's talk about that, this concept of mining. Because there's so many separate weird topics in Bitcoin that it's hard to understand how they piece together, and conceptually, for me anyway, they don't always necessarily connect. So this concept of mining, talk to me through that.
Okay, so let's go back to the dollar bill problem, right?
Yeah.
Think of that scenario of you giving me a dollar bill with nobody in the room, and think of that scenario of you giving me a dollar bill with 100 people watching.
Okay.
In the second scenario, it's a lot easier for you to prove that you have actually given me the $100 bill.
Everyone has seen it.
100%. Those 100 people in the room are your miners.
Okay.
Right? So we've created a digital currency that can be that can be passed over from person to person without being copied.
Yeah.
Right? The actual mechanism that allows you to do that is having these 100 eyes on you.
Yeah.
So you can never claim that you have not passed over that token or not.
Okay.
Those 100 eyes in the room, they need to be sort of compensated for the work that they're doing, and compensating them every time you give me, let's say, a dollar bill, they get 1 cent out of that dollar bill.
I see. Okay.
Not only that, but because they're putting so much effort into this, somebody comes in from outside and gives them another cent in the dollar bill. So there's two ways to make money as a miner or validator in Bitcoin. You're first watching the network, and the network rewards you for doing that by creating new Bitcoins and giving them to you. But also, every time you watch and record the transaction, you take a piece of that transaction.
Okay.
So that is what mining is.
Right.
So in a very old world description, it's the person making sure that, it's like the proctor in an exam room, and they're getting paid by the hour to proctor the exam.
Okay. I've never heard that description of it before, but now it makes a lot more sense. Okay.
So it started off in these communities. It was very small networks of miners, and very slowly it sort of started spilling over. There was times where Bitcoin was worth fractions of a cent. Lots of people in the community hear the story of the pizzas that were bought with Bitcoin when somebody paid 20,000 Bitcoins for a pizza. That was I don't know if it was actually the first real world transaction, but this is like the most famous case of, this is the first time that everybody knows about that something that was conceptualized and created on a computer was used to buy a real thing.
Yeah.
And it slowly picked up out of that. It started gaining traction in a wider group of the same community. That first cycle ended sort of around 2013, 2014. After that, it got picked up by online traders. Then slowly, bit by bit, it became a lot easier for you to buy and sell. So in those early days, it was really hard. You had to download some complicated piece of software to your computer. You had to write code to actually send a Bitcoin and receive a Bitcoin. It slowly started, the infrastructure around it started slowly getting built, where we got to a point in 2015 where online exchanges, just like your online broker where you buy stocks, started popping up where you can buy and sell. And the hype built up. It's very hard to trace back the actual points where it went from being something that people joke about to something that everybody takes seriously.
Yeah.
Then 2017 came along, big skyrocket, big crash and burn, and we've kind of been in a lull since then. And it seems that we're starting a new cycle now, and the difference, at least, so every cycle has a different, distinctive from the previous ones. Right now, it seems that the current upswing is driven by serious money coming into the space. And by serious money, I mean institutional investors. Think of your BlackRocks of the world, your Carlyles, starting to take a piece of their treasuries and putting it into this. And the reason this is happening is, historically, there has been an asset that the world has always used to guard itself in times of extreme uncertainty. And that asset has always been gold. Anytime there's runaway inflation, anytime times of extreme uncertainties like the ones we are in, where governments end up printing a lot of money, deficit spending skyrockets, people sort of move.
You hedge.
You hedge with gold. And from the early days of Bitcoin, there was a lot of people in the community who kept saying, this is going to be digital gold, this is going to be digital gold. It never really panned out. This year, it seems that is starting to actually happen. I wouldn't say like we're there, but there are certain like events that show that this is already happening. And by the events, I mean, like something that's that was hyped up very recently was PayPal now doing crypto, but I don't think that was like the really big one. The big one was a few months ago, MicroStrategy, which is a big firm in the US, took the decision to move all of their cash reserves into Bitcoin. And that was about, if I'm not mistaken, $500 million.
Wow, okay.
Then a slew of regulatory reports came out in the US of really large hedge funds getting regulatory approval to start buying and holding Bitcoin. So that's kind of signaling that there is some serious money that is now looking at this as an actual store of value, where they're not buying to trade, by the way, they're buying to hold. Most of those most of that flow of money is going into buying tokens. And those tokens are being held in storage somewhere, and they're never getting transacted again. So there's serious money coming in. The supply is limited by design. So we're seeing, we've been on a crazy past couple of weeks. But then who knows?
I feel a little bit smarter. Thank you very much. Ahmed, thank you.
Thank you, Chris.